Hi, trader. How you doing today? I hope your trading business has been good. I welcome you to a new trading week. I want to believe you've done your homework. You're fully prepared for this new week trading. Very important that as a trader, you have a plan. You need to create a plan. If you don't have a trading plan, you have planned to fail. Every professional and profitable trader has a plan before the market opens. It's very important you do what we call pre-market analysis to determine your actions, what you're going to do in the market when the market starts moving, when price starts moving, when the market opens. It is not when the market has opened or when price has started moving that you start making decisions. Most times you're going to make a lot of error due to emotions getting attached to trade. So it's very important that you do pre-market analysis, which is what I will be doing in this video. Once more, I want to welcome you to a profitable trading week. I pray that this week will be more profitable than the former weeks. Like I said, you need to have a plan. You need to have a plan. If you don't have a plan, you have planned to fail, you're going to fail. So always create a plan, your weekly plan, your daily plan. Very important. If you're a day trader, you should have your daily plan. If you're a swing trader, you should have your weekly plan. And if you're a position trader, you should have monthly plans. It's very important. So let's go straight to the chart. You know how I do it. The first thing I look at is the fundamentals for the week. Why do I look at the fundamentals? To identify the days that much volatility be expected or is expected in the market. That is why I look at the fundamentals first, because the fundamentals is the major driver. Technical is the map, but the driver is the fundamentals. So that's why I always look at the fundamentals to know the days that high volatility is expected in the market. So we'll go to, I use Forex Factory. That's the calendar I use for checking news. So this week starts 12th to 18th. Okay. 12th to 18th. So let's see. Now I'm only interested in the major news. The major news. We have medium impact, we have high impact, and we have low impact news. I'm only interested in the major news because those are the major drivers of the market. So that's why I'm only focused on the major news. Okay, so on Sunday there is no major news. On Monday also there is no major news. And when a major news is not expected, we are not expecting any major news. Most times price goes into a range. Most times price goes into a range, and sometimes the market is very volatile on days that there are no major news. So all you have to look out for is your technical setup on days like this. When there are no major news, there is a high probability that your technical setup would play out. Okay, there's a high probability that your technical setup will play out. And also when a major news is not being expected, your profit target, you shouldn't aim for too much on days that there are no major news. You shouldn't aim for too much. Okay, your risk reward could be 1:1.5. Aiming for 1:1.3 or 1:4 might be too high. Okay, so you should reduce your risk reward and you should be very conservative on days not major news is expected. Okay, so on Tuesday, Fed Chair Powell will be speaking by 5:20 p.m. Nigerian time, and by 6 p.m. Nigerian time, Bank of England Governor Bailey will be speaking by 6 p.m. and the United States Fed Chair Powell will be speaking by 5:20. So we should expect high volatility on these pairs between 5:20 and 6 p.m. We should expect high volatility. Personally, I wouldn't be trading USD pairs and GBP pairs on Tuesday because of this major news. So I'll be looking for opportunity to trade these pairs, GBP pairs and USD pairs on Wednesday. As you can see, there are no major news for US dollar pairs, and there are no major news for Great Britain pounds. So there's a high probability that this news or this speech that will be given on Tuesday, the impact will be seen on Wednesday. Okay, so I would advise, if you're not a fundamental trader, if you're a technical trader, it's best for you to wait for the speech to be released. And since it's late hour of the London session, personally, I don't trade anything from 5. I don't execute trade. Once it's 5 p.m., I don't take any setup. I don't take any trade. I wait till the next day, which the next day in London session, that is when I look for my setup. And that is what I would advise that you do if you're a technical trader. So on Wednesday, we have Australian dollar. Governor Bullock will be speaking by 8:45 p.m. Nigerian time. I always advise that when the governors of these banks wants to speak, it's best that you wait for them to give their speech. Okay, wait for them to give their speech before you trade that currency, before you trade the pair, that currency pairs. Okay, that's my advice. Then on Thursday, we have Australia will be releasing its employment change, unemployment rate. Great Britain will be releasing its gross domestic products data. And for United States, now for the past few weeks, last week, the United States was supposed to release, I think, unemployment claims. That news was not released. Then the previous week, they were supposed to release the NFP, wasn't released. They said it was going to be released last week. They didn't release it last week. And you can see this week also, there are no specific time for this news. There are no specific time for this news. So the probability that this news will be released is very, very slim. Okay. Probability that this news will be released this week is very slim. So we have core PPI, core retail sales, maybe before Thursday, the time will be given. Okay. We have PPI, we have retail sales. So we should expect high volatility on USD pairs on Thursday. Should expect high volatility on USD pairs. So if you're considering trading USD pairs this week, you should be considering trading on Wednesdays and on Friday if you are not a fundamental trader. If you're not a fundamental trader, if you're not a news trader, the best days to trade the dollar pairs this week will be on Wednesday and on Friday. You want to wait for PPI retail sales unemployment claims to be released before you trade the dollar pairs. So if you look for trade opportunity on Wednesday, after Wednesday, I think the next day to look for opportunity on these pairs, GBPUSD, EURUSD, USD pairs should be on Friday. Okay? So that's my take on the fundamentals. So let's go to the chart then. After analyzing or knowing the days that this news will be released, the next thing I do is to analyze the dollar index. I need to know if the dollar is bullish or bearish. That is what I use the dollar index for, to define the trend of the dollar. Is the dollar bullish or bearish? It is very important that you know this before you take trade on USD pairs. It is very important to note this before you execute trade on the USD pair. So let's go to the charts. So we'll start by analyzing DXY. Okay, so what do we have here on DXY? So we need to start with the weekly time frame. We need to know the trend for the week. That's the reason we start with the weekly time frame. What is the direction for it? So last week we could see buyers were in total control last week. I think it was on Friday, sellers showed up. But from the beginning of the session last week, the buyers overpowered the sellers. So it was strongly bullish last week. And Friday started seeing the bears show up in the market. So this is what we have. Now we have this high as liquidity. This previous high is an area of liquidity. And the low of last week also is sell side liquidity. Okay, so we have this high, we have this high and this low. That's our area of liquidity. Okay, so it's either price will go sweep this liquidity or is coming from this low. That's what's going to play out this week. Price will either sweep the liquidity or sweep the buy side liquidity or sell side liquidity. So now you're done with that on the daily time frame. We'll go down to, sorry, we're done on the weekly time frame. Now we'll go down to the daily time frame. So what can we see on a daily time frame? First, let's apply our Fibonacci. We want to know if price is at premium or discount. If price is at premium, we want to sell. If it's at discount, we want to buy. Okay, so we apply our Fibonacci from the swing high to the swing low. Okay, you can see, and you can see the market is or closed above equilibrium. You can see the market closed above equilibrium. This tells you that price is at a premium area. Is at a premium area, and you can see the last candle closed as a bearish Marubozu. The last candle, this was Friday candle, you can see it closed strongly bearish. So this is a bearish Marubozu. Also, you can see that we had a fair value gap here, and price filled that gap last week. And you see, this fair value gap would be the reason for this retracement. This fair value gap would be the reason for this retracement. Price has filled that fair value gap, and you can see that the market closed below that, the low of that fair value gap. That is a strong indication that the bearish momentum is high. The bearish momentum is high. It's an indication that supply is increasing and demand is decreasing. Okay, so based on what we have on a daily time frame, I would expect the dollar index to be bearish this week. I would expect dollar index to be bearish this week. Okay, now let's look at the daily time frame. Now, like I've always said, when you open the charts, you want to identify where price starts dropping or where price starts going up. That is the first thing you want to identify. And at that point where price starts dropping, is it at a premium or discount? Okay, those are the first things you need to identify on the chart. Okay, so as you can see, price started dropping from this point. This was the opening of this candle. Price started dropping at this point and it closed at this point. That is about, this is 98.84 and this high is 99.38. That is about 50 pips difference. That is 50 pips difference. Now, if you didn't sell from this point, I don't think it would be wise to sell at this point. Okay, if you didn't sell at this point, at the opening of this candle, because if we go down to 4 hour, let's go down to 4 hour. So you can see we had a bearish Marubozu here, 4 hour. This would have been a good entry. This would have been a good entry for dollar index, okay, after the formation of this candle. Now, if you had missed this first move, you would have waited for this retracement, this little retracement. Okay, so you would have entered sell, okay, after the breakout from this support. So this was the first opportunity. This was the second opportunity. So if you have missed this move, you should expect price to retrace back to at least equilibrium. Price should retrace back to equilibrium before you consider selling. Okay, price should retrace back to equilibrium, or price should retrace back to premium before you consider selling. Selling at the current market price is at a very high risk, so it's best you wait for price to pull back. So let's go down to 1 hour. So what I will do here is to identify fair value gap. I have this fair value gap on 1 hour time frame. These are the areas I will be considering joining the bearish move on dollar index. Okay, this is my expectation on the dollar index. I want to see price pull back to these zones, one of these zones, before going bearish on dollar index. There is a high probability that the liquidity residing at this previous high is swept. Okay, so there's a high probability that the liquidity reset on this previous high is swept. I would love to see that play out before making a decision on dollar index. Okay, so this week I am bearish on dollar index. Now, what can you see on 1 hour time frame? On 1 hour time frame, you can see we apply a Fibonacci from this swing low to this swing high. Price is currently at a discount area on the 1 hour time frame, which means that price is likely going to retrace back from this area. We have this fair value gap here. That price might fill before going bullish. So you could also look for buy opportunities. Okay, so if after price fills this fair value gap, you see a bullish pattern, you see your buy setup, you could risk it, but understand that you are trading against the trend of the market. That's counter trading. When you're taking a trade against the trend of the market, I always advise that you be conservative. You should be conservative if you're trading against the trend of the market, and your risk reward shouldn't be too high. Shouldn't be too high. That's my advice. So finally, if I see a bullish reversal pattern from after price fills this fair value gap, I'll look for opportunity to buy. Okay, I'll look for opportunity to buy. And my first target buying from this zone will be this previous high, be this high. And my second target will be this zone. Okay, my first target will be this zone. Okay, so let's move on to yen baskets. You need to look at yen to know the strength of the yen, to know if yen is bullish or bearish. That is what will determine our decision on JPY pairs. Okay, so what we have, market has opened for the week, and you can see at the moment yen is bearish. You can see this is the first candle for the week, and you can see it's a massive drop on yen, over 60 pips now. Okay, it has done over 60 pips. So let's start with the weekly time frame. So week has started and yen is bearish. Okay. This is the weekly time frame. Last week, the candle closed. It was bearish, strongly bearish, but towards the end of the week, buyers came in and pushed the price up a little. Buyers came in. It was a strong rejection, you can see. So price tapped into this fair value gap, and we had a strong rejection. And as you can see here, we still have this fair value gap that has not been filled. So there's a high probability yen is going to fulfill this fair value gap this week. So last week we had a strong rejection on towards the end of the week. So you can see we had a strong rejection. Okay, we had this strong rejection. So we had this spining bottom, which indicates change in trend. So on Thursday, we had a spining bottom, and on Friday, you can see the reason for the buys on Friday, strong pullback. You can see that. So after this pullback, I would love to see retracement on yen. Okay, that's what is playing out now. Because after the formation of this pattern, if you go down to 4-hour time frame, or let's just apply our Fibonacci from this swing low to this swing high. That was the high, okay? This swing low to this swing high, okay? So I would love to see price pull back to equilibrium at least. Price should pull back to equilibrium, or you have a look at the lower time frame. Okay, so we have this fair value gap, okay, or you can see this fair value gap here for our time frame. Let's see 1 hour. Okay, so 1 hour also we have, okay, so we have this fair value gap of 1 hour time. So depending on the pattern that forms here, one can consider buying after price fills this fair value gap. You can see this fair value gap. Okay, you can see this fair value gap. Might want to consider buying after price fills this fair value gap. I think that's about 50% retracement, right? You can see. Okay, so that's about it. Yeah, you can see. So you wait for price to pull back to at least 50%. 50%. So this is where you should consider looking for buys. Okay, this is where you should consider looking for buys. I would love to see price retrace back to probably fill this fair value gap. Okay. I expect yen to be bullish. Okay, though it's still going long term, it's still going to fill this fair value gap long term. It's still coming to fill this fair value gap. But I believe after it has swept the liquidity residing at this previous low, it is expected to go back and fill the imbalance it created before sweeping that liquidity, which is this. Okay, so also we have this resistance, support stone resistance, okay, which will be my first target. I'm buying yen from this zone. This will be my first target. Okay, this will be my first target. Price is expected to pull back to test this level. Okay, so this will be my first target. Yeah, this will be my second target. Probably after it fills this fair value gap, then we should expect sell from that area. Okay, that's my take on basket. Okay, let's look at foreign pairs. So looking at euro, I will analyze euro USD, GBPUSD, gold, and GBPJPY. Okay, so let's start with GBPUSD. So on GBPUSD, let's start with the weekly time. Okay, so last week also was strongly bearish. That means the dollar was strong last week. The dollar was strong last week, but towards the end of the week, the dollar weakened. Yeah, that was on Friday. Dollar weakened. So, after the close of the weekly candle, I think last week candle tested the support level. Okay, you can see it tested the support level, tested. You can see this zone we have here. It's like a demand zone. You can see this. It's like a demand zone. Price came to test that zone. You see that? This demand zone. There was a strong rejection from that zone. So let's go down to daily and see the pattern that formed. If we're able to identify a bullish reversal pattern on the daily time frame, then we should be looking for opportunity to buy GBPUSD. Okay, so we have this on the daily time frame, and if you apply a Fibonacci, it's just the inverse of what we have on dollar index. It's the inverse, right? So if you apply a Fibonacci from this swing low to this swing high, price has pulled back to a discount area, and go down to 4 hour. I'm sure we have a bullish reversal pattern. You can see on the 4 hour time frame, we have this engulfing pattern, which indicates change in trend from bullish, from bearish to bullish. This is an engulfing pattern. Okay. So now, after this pattern formed, a fair value gap was created. So if you apply our Fibonacci from this swing low to this swing high, we want price to pull back to at least equilibrium. Okay, before you buy. Buying at the current market price is at a very high risk. So it's best to patiently wait for price to pull back to at least 50% Fibonacci. That's the area you should be looking for your buy pattern. Price should pull back to at least 50% Fibonacci. And you can see here we have a fair value gap. So we have a fair value gap, which is at a discount area. So this will be a very good area to look for buys. Okay, this will be a very good area, this fair value gap. Okay, be a very good area or the retest to this resistance to support. That will be a very good area to consider buying GBPUSD. And if you are buying GBPUSD from these zones, your first target should be this previous high. This previous high should be your first target, and your second target would be this fair value gap. Okay, this fair value gap. That should be your target. I hope that is clear. I hope that is clear. Okay, so that's my take on GBPUSD. I'm looking for buy opportunity on GBPUSD. I would love to see price pull back to one of the zones for going bullish on GBPUSD. Okay, so let's move to the next pair, EURUSD. Okay, so the pattern we have on EURUSD is also similar to what we have on GBPUSD, and that's because both pairs are positively related. So last week, the bears overpowered the buyers. It was strongly bearish last week. Towards the end of the week, the bulls showed up in the market, and yes, there was a strong rejection after price tested this support. See that there's strong rejection from that level, swept all the liquidity that was residing at these lows. Swept all the liquidity residing at these lows. See that. Okay. Swept all the liquidity, strong rejection from that zone. So let's see what we had on daily time frame after the close of the weekly candle. Okay, so we have, looks like a Mariposa and see. So we had this, but let's go down to 4 hour. We should be able to identify a bullish reversal pattern on 4 hour. You can see on 4 hour, we had an hammer 1 hour, which is a bullish reversal pattern. See, and after the formation of the hammer, you can see price went up. You can see price went up and it created a fair value gap. So if you want to buy, you sure don't want to buy from the current market price, right? You can also see that price, I think, just pulled back to, you can see it just tapped into a fair value gap. There's a high probability that price might pull back from that fair value gap to unfill this fair value gap. Okay, so this fair value gap that's created here. So this will be a very good area to look for your buys. Okay, this is where I'll be looking for my buys. Now let's go down to 1 hour and 15 minutes. There should be a shift in market structure, those time frame. Okay, so you can see we have this, see price broke out from this high. Let's see what played out here. The swept liquidity residing at this sweep of liquidity. And after sweeping liquidity, price went closed above this high. This is where the shift in market structure. Say this is where the shift in market structure. So this is a bullish structure on the 1 hour time frame. Okay, so since the 1 hour is a bullish structure, you should look for retracement back to, this is the most down. This is low, this is high, low, higher, low, higher, high. So it's supposed to create a new higher low. Okay, it's supposed to create a new higher low. So wait for price to retrace back to this fair value gap before we look for buys. I hope that is clear. That is my take. EURUSD. So I'm bullish on EURUSD and GBPUSD. Now the direction might change Thursday or Friday. Okay, trend might change. Trend change. So before you execute a buy or a sell, you need to identify your patterns. Okay, you need to identify your patterns. Okay, you need to identify your patterns. So that's my take on EURUSD. So let's look at GBPJPY, then we'll look at GBPJPY. Okay, GBPJPY, let's start with the weekly time frame. Last week, GBP is bearish, right? The buyers overpowered the sellers at the open of the markets. You can see it was strongly bullish when the market opened, and before the close of the market, sellers came in and overpowered the buyer. So you can see here we had a fair value gap, which is at a premium area. That could be the reason for the rejection. That could be the reason for this pullback. Price had to pull back to go and fill this fair value gap. Now it has filled this fair value gap. Now what do we have here? We have a shooting star. This is a shooting star candle. This is a shooting star candle. Okay, And after the formation of that shooting star on the weekly time frame, okay, after the formation of that shooting star on the weekly time frame, let's see the pattern we had on a daily time frame. So you can see the pattern we had on a daily time frame. We had a candle pattern that looks like, yeah, a shooting star, and this candle engulfed it. Can you see that? This candle engulfed it. This tells us that GBPJPY is bearish. GBPJPY is what? Bearish. So we should expect yen to gain strength this week. Okay, this is a bearish pattern, and you can see on a daily time frame when the market opened last week, it opened with a very huge gap, and that gap has not been filled. When a gap like this is created, price is expected to pull back to fill that gap. Okay, so that is most likely going to play out this week. Okay, now bearish on GBP, but you don't want to sell from this point. You don't want to sell from the current market price. You want to wait for price to pull back to premium area. Let's apply our Fibonacci. This swing high, this swing low. Okay, we want to wait for price to pull back to at least 50%. That's the equilibrium level before you sell. You don't want to sell from this point. You don't want to sell from this point. So let's go down to 4 hour. So on 4 hour, you can see we have this fair value gap. This will be a very good area or zone to consider selling GBPJPY. This will be a very good zone to consider selling GBPJPY. Okay, let's see what's happening on 1 hour time frame. Okay, see 15 minutes. Okay, so it has created a gap of 15 minutes. If you want to risk buying, since it has created a gap on 15 minutes time frame, you might want to wait for price to come fill this gap it has created here. Okay, wait for it to fill this gap it has created here before you consider buying. Okay, they have this good gap also. So in this case, let's apply our Fibonacci from this swing low to this swing high. Okay, you want to wait for price to pull back to a discount area, which should be below level 50. So you should be looking for your sales around this zone. Okay, look for your buys around this zone. This zone, wait for price to pull back to this zone before you risk buy, or wait for price to sweep this liquidity. You might sweep this liquidity because the normal weighted traders have executed buy after the formation of this candle that looks like a spine top, and their stop losses will reside at this low. So they might want to sweep this liquidity before going bullish. Okay, so patiently wait for price to pull back to this zone before you look for price. I hope that is clear. So lastly, we'll be looking at this gold. Gold has been bullish, and gold is still bullish long term. Gold has been bullish and it's still bullish long term. Every sell you see on gold is a retracement. Every sell on gold is a reversal. Okay? Flow with the trend. Flow with the trend. Gold is bullish. Okay? Buying gold at the current market price is at a very high risk. So I always advise that you wait for price to retrace. So you can see the pattern we had here on the daily time frame last week. This bearish candle closed below the low of this candle. That tells me that supply is increasing and demand is decreasing. Now, after the formation of this candle on Thursday, if you go down to 4 hour, most likely it's created a fair value gap. And see, it has created this fair value gap here, and that could be the reason for the pullback. Price had to pull back to fill that fair value gap. Now that it has filled that fair value gap, there's a possibility that it might retrace. Okay, price might retrace, but the trend is still bullish. So in this case, you should apply a Fibonacci. Okay, let's take it from this swing low to the swing high. Wait for price to pull back to at least level 50 equilibrium, at least. Okay, so this is where you should be considering looking for your buy setup. Okay, so this week gold might sweep this previous high this week. Patiently wait for price to pull back, retrace back into this zone before you look for buys. Don't buy from the current market price. Don't buy from the current market price. Let's just see what's happening on 1 hour. Okay, so we have 1 hour time frame. So you can see we have this fair value gap here on 1 hour time frame. Though price tested, build this gap last week, they might want to retest this low because the normal weighted players have expected buy after this candle, this pattern. This is an hammer, and also after this pattern we have here, the normal weighted players have expected buy, and their stop losses residing at this low. So there's a high probability that will come to retest these levels before going bullish. Okay, so the bias for gold this week remains bullish, remains bullish, and that will be all for this session. Will be all for this session. If you have any question, have any contrary view, for those of you the VIP group, drop it on the groups. Drop your questions on the group, and if you're watching this on YouTube, drop your take on in the comment section. Drop your take in the comment section. Now, for those of you that are new to trading, now everything I've shared in this class, it takes someone who is experienced to be able to apply them and get positive results. Okay? You need to be experienced to be able to apply these things and get the results. If you're new to trading, you have no experience, it is very important that you acquire basic knowledge. Basic knowledge. Okay, you need to have a strategy to be able to win consistently in this market. So if you're new to trading, I would employ that you get my course on Forex trading mastery. You need to get the course on Forex trading mastery. Trading is not something you can do on your own. Let no one deceive you. Yes, you can do it on your own, but you're going to spend time and it's going to cost you money. So you're going to spend time and it's going to cost you money. So if you want to save time and money, you don't want to blow several accounts before you become profitable, I would advise that you get my course on how to become a profitable Forex trader. You can find the link in the subscription below. Find the link in the subscription below in the comments section. Okay, find the link in the description space, please. The description, you'll find the link there. Get the course. It will really, give you a good start in this market. Don't try to do it on your own. You would hurt yourself. Everyone that has tried to do it on their own always have a sad story to tell. I tried to do it on my own, and I know what it cost me. I know what it cost me. I know what it cost me. So I don't want you to go through, experience those challenges, those ups and downs. Okay? You need to start the right way. Start the right way. Okay, so get the course. And if you're still struggling, you don't have the strategy you're trading for over 2 years now, and you're not consistently making profits from the market, I would also employ that you get the course. Now, I don't sell course. Okay? I don't sell course. I sell mentorship. Mentorship. I believe after watching the video, you would have questions. Okay? You would have questions. So have access to the video. Once you purchase the video, you have access to 30 days mentorship. 30 days mentorship. You'll be added to a trading community on WhatsApp and also on Telegram, where you can ask questions, where you have access to trade calls. Anytime I see a setup, I share it on the group. Okay, so you have access to that. You have access to Zoom classes, which holds at least 3 times in a week. Okay, because in those days I come to share my expectations in the market. Okay, so it will help you grow. It will help you become a better trader. You need to belong to a trading community. It's very important. If you want to do well in Forex, you need to belong to a trading community, especially if you're new to trading. You need to belong to a community. So I believe you got value from this video. If you did, please give the video a thumbs up. And if it's your first time seeing my video, please subscribe to the channel so that anytime I come on live or I drop videos like this, you get notified by YouTube. You don't want to miss any of the content I'll be dropping in the future. So do subscribe to the channel. Pray that this new week will be a profitable week for you. Pray that you make the right decisions, apply good risk and money management, and at the end of the week, you come back with good news. You come back with good news. That's my prayer for you. But like I said, ensure you do the right thing. Ensure you do the right thing to apply the right principles to get the right results. Thanks for watching. I'll see you in the next video.